So this is kind of like a miniature highlight of, you know, some things you want lined up in order to predict it's going to go down or up. And you don't have to predict this big move all the time. So if you have like if you're trying to predict a move lower, it doesn't always have to be the big ultimate move. You're just trying to get good at putting the ball in play if we're using a baseball analogy. And then you'll find the bigger moves. The ball will find its way through the infield, or you'll find the right pitch when you're making contact to hit hard somewhere. But if you're always looking and thinking every time you hit the ball, it's got to be hit hard in order to get a hit, you're in the wrong business, or it's the wrong approach. So in this highlight, the things that we have lined up are what we call laser. And if we think it's going to go down, we want this to be green, which would include some green positions, which are long positions in here. And then we've got this, which shows anxious and eager sellers outweighing the eager buyers. And let me just back this up a little bit and then go forward a little bit. So we do go down through there, right? But it was just a little bit of a move lower from here to here. Okay. And then it's like, well, what do you want to see for the market to go back down? Well, some of the same stuff. You want the laser to go green or stay green. It goes red and we get a little move up. And from this, so it's like the pause, 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 and then it goes green up here, not down here, with a lot more sellers that are anxious than buyers, and the market goes down. Now it goes down from 10 even to 5 even. If I fast forward the whole thing, it eventually keeps going lower. But the point is, how quickly can you be right for a little? And then you could work on being right for a little more and a little more. It'd be great to get short and have it break 10 points, take a 10-point winner within a minute or two and never take any heat and go straight down. But that's not reality. You want to minimize the heat you take in a position. If you're a long time frame trader, then the word heat is relative to it could be against you a little bit, but within the confines of your trade. The smaller and shorter time frame trader you are, if you look at a funnel, and the longer time frame guys are up here, and the smaller time frame day trading type that you get put you down in here where your definition of heat becomes tighter. And so if you sell it here and the market goes up here right away, a point or two, that's heat. The timing was bad. If you waited 10 seconds, you could have sold it 2 points better. So of course it's bad. You're not going to make a living if this is consistent with your entries, where you're always taking heat before you take profit. Doesn't mean every trade needs to be heatless. A tick or two isn't really heat, but you can't have to, 2 points of heat every time, and then it goes down, and you could pick better locations. There's something you're missing. So you want to get it where you could be bearish with the tools in here before it goes down to here. Once in a while, and I'll catch myself, like, are you bearish because it already broke? Are you bullish because it already rallied? Because that's human nature. And there's no skill that's going to go with that, or you could build from that. Because everybody's going to be bullish after something goes up, bearish after something goes down. But generally, it's too late. And you're not going to get paid because it's not a prediction. And you're actually going to be late, and you're going to chase, you're going to reach, you're going to do all the things that create bad locations, which are the opposite of trying to get consistent. Location is so important in the time, and it doesn't have to do with price. Like for a house, yeah, the lower the price, the better. But that's not always the case in like trading. It's all about timing. So if I were to ask someone in a vacuum, is 04 better to buy than 06? Everybody would say, yeah, 04 is better to buy than 06. It's lower. Silly. But if then I told you after you bought 04s, it did this and you're long and it did this, it did this, it did this, and then it went up. But if you got long 06s, it just went up. Now you see the difference? 06 is a better buy because you're not going to want to have to sit through all this emotion. You might have got shook out. You might have taken a loss and then it did what you thought it was going to do. So you see how 04 isn't better than 06 if the results are from a timing standpoint. 06 just went up. You don't want to have emotional capital and baggage in too many of your trades because it's going to make you do things that are obviously not objective. So think about that out of this video, and that is to buy it and get long. In a vacuum, most people would say 04s are always better than 06s, but it's what price does afterwards that really determine where the better location is.